AMC, it's been a while. We haven't talked about AMC here on the channel in quite some time. And there's been a reason for that. AMC continues to go lower. And I don't want to rub salt in the wounds of all of the AMC holders that are out there telling you that I told you so. And that's not what this video is about. It's not about saying I was right. It's not about saying that AMC is not going to go to $1,000 for the MOAS. It's just simply talking about where AMC is today and what is going on. Gonna break it all down right here in this video. So if you want the truth on AMC, stay tuned.
Yeah.
What's going on, guys? Patrick here today talking about AMC, the hottest meme stock that never was hot. Well, it was hot and then it went down and now it's simmering out and it's heading to single digits. So AMC is a stock that millions of investors have basically bought into with the idea of a massive short squeeze that will send the stock above $100. I've seen, $1,000 targets, even $100,000 targets on AMC. The idea that millions of investors bought into a movie chain that has been losing money for the last 10 years, believing that the company would somehow just magically squeeze to the moon because of synthetic shares, because of manipulation, because of all these fugazi. Remember, every single theory that the apes have basically pushed out onto the world has either just gone a wazi, or it just has not actually materialized. And that's the problem with this whole movement with the apes, is all of the theories for why AMC should go up are based on hypotheticals, where the actual truth about the company is very simple. The company has not made money, and well, they're running into the point where the business itself cannot support the actual business. The only reason that AMC has all of the cash is because of the dilution, because of the retail investors buying into the dream and buying all the shares that were offered. The CEO of the company made millions and millions of dollars selling shares as well, while the company stock went lower and lower. Today, we can see that the earnings came out and they talked about how AMC posted a narrower than expected loss during the first quarter. Remember, keyword here is loss. They still lost money. And this has been a consistent thing with AMC. Adam Aron came out saying that this was their strongest first quarter in 2 full years. Obviously with the pandemic and everything going on. But even if you go back further, you go back before the pandemic, you go back to, just normal times in America. Let's say you go back to 2015, 2016, the company was still losing money. The company lost $337 million in that quarter compared to a loss of $567 million the quarter before. That AMC has spent billions of dollars in the past on certain investments, on buying other movie chains with no actual return on that money. They also recently bought into a gold mining stock. They invested, I think, like $60 million, $30 million into a gold mining stock, which is actually absolutely insanity. You can see the price of AMC today at the $12 level. If you go here at the daily chart and you look back at AMC, you can see back there at the $36 area how AMC has just been sell, and now breaking below this $13, $14 level. And is at $12 currently. The actual fair value for this company, if you look at the actual fair value of what AMC is worth, you would put us way down into the single digits. You're thinking, maybe $8, $6, $4, or even lower if you go all the way down to $2. I would say the realistic actual value of AMC as a company, they're losing money. Remember, they're losing money every quarter. The real value of this company is maybe $2. And that's, again, being a little, on the high side. I would say maybe even $1 is where AMC really is worth. And you might say, well, you're crazy. You have no idea what you're talking about. Why do you say this? If you go back, let's just go back to look at AMC on the chart. Let's go back before the pandemic. Let's look at 2018, So AMC was trading around $20. And you got to think, this was before they inflated the float by 5 times. They sold millions and millions of new shares, diluting the float. So when the stock was trading at 20, if you divide it by 5, where would that put you at? That put you around $4, right? After of that. And you can see AMC touched down, during 2020 and, going into the beginning of 2020, it touched down to the $2 level. And that's before it had a 500 million share float. Back in 2018, 2019, when the stock was trading here at the $20 level, you had a 100 million share float, right? And that's when the stock was trading at 20. So that was the value there in 2018 when the company was actually, when business was booming, whatever, movies were coming out, there wasn't, a pandemic, things like that, no shutdown and all that. Even back, you go back to the highs, like the highest that AMC was before then, you're looking at $35 to $36. So you're thinking, okay, we have 100 million shares in the float in 2018 and the stock was trading at $20. Now, in 2022, you have a 500 million share float, right? Where does that put us? If you had a $20 value in the company back when there was 100 million shares, so you take away let's just say 5 times, that'll put us down around $5, around $2 to $3. So that really gives you an idea of what the actual company is worth. You get rid of everything that's going on here and you just focus on where the company was trading before the pandemic, before the shutdown and all that. If you focus on that, it pretty much gives you an actual realistic value for this company. Now, you can argue that the short squeeze is not a fundamental play, right? That the short squeeze is going to happen because of all of the synthetic shares. The problem with that now is that the stock has barely squeezed since it squeezed back there in May of 2021. So now we basically, we're at a point, I think we're almost to a point of it's been 1 year. 1 year since the squeeze when it went from $12 up to $72. And well, you can see from $64 down here to $11. So let's say you bought at the $60 area, you're now down 80%. I made a video on YouTube talking about how the company would end up screwing over investors when the stock was $60, and everybody laughed at me and said that I had no idea what I was talking about, and now the company is down below $12. Again, breaking below $12 right here, getting back down there today, kind of supporting at the $11.50 area. I'm not trying to rub this into people's faces. I don't want people to, see this and be like, oh, he's just trying to make fun of all the apes that bought at the $40, $50, $60 level, $30, $20, right? The fact here is I want people to learn a lesson that the media, that the companies, that Wall Street baited all of these investors into buying this company. The CEO of the company, it was all just one big bait, right? They needed retail investor money to be able to stay alive. Like I said, they have $1.3 billion. The only reason they have that cash surplus is because of the retail investor dilution. They had to sell shares to retail investors so that they could stay in business. And like I said before, they've invested billions of dollars before, and they've ended up losing all that money because there was no return on that billions of dollars invested. While Adam Aron has been getting paid millions and millions of dollars to basically run a company that is broken. The company is not making money. They will not make money with their current situation. It's not going to happen. You look at a company like Netflix. Netflix is losing subscribers. Obviously, there's more and more options out there for streaming platforms. You have HBO. Movies are now going directly to HBO. People are less likely to go to movie theaters. I love movie theaters. Don't get me wrong. I do. I love movie theaters. I think movie theaters are a lot of fun. You go see the movies, it's high quality. You get the sound, you get the experience, you get the popcorn. But let's be honest. Movie theaters can still exist even if AMC does not exist. AMC as a business is a failed business. It's been a failed business for the last 10 years. They're not going to make a turnaround, especially nowadays with all the other options out there. If AMC couldn't make a turnaround back in 2016, 2018, before, Netflix, before all these streaming services really blew up, if they couldn't do it then, why would they be able to do it now? The turnaround for this company is not going to come. And I'm being as frank as I can be because you have to think about reality. If we keep going into this bear market that we're going into, there is literally 0% chance. I'm not going to say 0% chance because that's going to get me burnt. Obviously, this is not financial advice, but there is a very, 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 very small chance of a squeeze happening. And it's funny because I see everybody online talking about, the squeeze is going to come. The squeeze is going to come every day. The same same story of why the squeeze is going to come, why the squeeze did not happen today, and why it's going to happen tomorrow. It's always the same story, right? Every other day, it's like, well, the reason it didn't happen today is because, well, next week, all the, the FTDs, there's going to be more FTDs next week. The FTDs are the reason, right? It's always the same story for people on AMC, living in a world of denial, basically living in a world of fantasy, fugazi. This is the stock market, my friends. This is reality. This is not a fantasy world. Making up, theories and ideas of why a stock is crashing down does not make you right. It's not going to make the stock go back up. And that's just the truth. And that's what you have to focus on here. You have to understand, at the end of the day, there is a reality check to every stock. Look at Netflix. Look at all these companies that are getting hammered right now because we're in a market that is not going to be nice, that are living in a fantasy world. The fantasy has come to an end. The world that we lived in before, where you could just buy the dip on any stock and it would go higher in the future, that quite possibly could be ending now. Or at least for right now. There's a lot of companies that were basically up on hot air that have now been popped. So AMC, I still believe that this company will hit single digits much sooner than it ever hits $100 or anything anywhere near that. I want to make it clear, I am not against the retail investors. What I'm against is all of the people out there that are pushing this fugazi, the YouTubers, the media, all the people that are on stock tweets everywhere telling people that, guys, just keep buying. That is not working. It's not going to work. It's not a good investment strategy. Just keep buying. It's not how you make money, especially when a stock keeps going lower and lower. Remember, this stock could go down to $2. And at that point, everybody that bought at 15, that bought at 20, that bought at 30, they're going to be down massively and they won't have any more money to buy the dip. At some point, buying the dip becomes just buying nothing. You're just buying more. And that's literally all you're doing. You're just adding more losses onto your overall loss. And you can't just keep averaging down forever. That's the thing. A lot of people say, I'll keep averaging lower and lower. It gets to a point where you just can no longer average down. It just gets to that point, and it will happen. People will have to sell at some point. I see people like, I'll never sell. I don't care how low it goes. Well, why? What are you trying to prove? What is your motive here? You're trying to beat Wall Street? Well, Wall Street beat you. It bent you over, and it literally beat you till your butt was red, and you took it. And you thought that you were winning. You thought that you were beating Wall Street. What a terrible, terrible plan, my friends. We don't try to beat Wall Street. We ride the waves. Bears and bulls make money in the market. It's the pigs that get slaughtered. And I'm sorry to say, the AMC Apes are pigs.
Yeah.